you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite
You guys,
low.
I've been on the road for so long that I let this story slip by me for a couple weeks. It's absolutely disgusting what's happening right now with institutional investors and Wall Street. Before I get into it, understand this video is going to be absolutely bonkers. Now, the data is in, and apparently Blackstone just purchased another 38,000 housing units. And you guys are probably familiar by now, but new legislation has been put into Congress that's trying to ban and bar institutional investors from purchasing residential property. Now, personally, I love it. I don't think it's ever going to get passed. I think there's too much corruption and greed, but I think it would be amazing to pass. And I understand they may only own like 5% of the houses, but I don't care. We need 5% of the houses, and that would make a substantial difference. And do me a favor, do you guys think that the government would be infringing on their rights, or do you think that the government would be helping the little people like us if they banned institutional investors from investing in SFRs? This is one of the primary reasons, and it's not just them, it's these mom and pop shops, it's these one foreclosure at a time people that just continue to buy. And the problem, guys, is they are buying affordable housing that literally wrecks it for all of the locals and all of the natives that have been growing up in metro areas that are finally ready to be a homeowner, finally ready to live the American dream, finally ready to start a family. But they've been robbed of their dream of home ownership. And again, that's a result of greed, and something needs to change. But as always, you guys know I'm just a normal person. I'm not a financial advisor, even though my bio is as a lender, mortgage residential loan officer of over 20 years. I've done probably 1,000 or more loans. I've helped thousands of consumers. I'm also a realtor, been a realtor for about a decade. Love it. It's pretty easy. I love looking at the numbers. I love accessing MLS, but I'm also an instructor. I've been instructing realtors and loan officers for the past 5 years, and I'm approved by the state of Texas to be a provider of real estate education. So real estate is my life, you guys, but right now I'm warning people as a result of my own experience, being that during the GFC I had a foreclosure, repo, and bankruptcy. I had to crawl myself out of that gutter to put myself in the position I am in now, which I have great credit, I have great purchasing power. I already own a home at 2.5% interest rate, yet I'm renting myself right here. So I got a lot of insights to give to you, and I'm going to tell you guys the most important thing right now when it comes to affordable housing is you. It's not the interest rates, it's not the price, it's not the location, although all of those things vital. Yes, they're vital, but the number one most important thing is you. And so I've made you a free home buying course for free. You can put in a fake email address. I don't care. I just want you guys to learn the bare minimums of how to effectively purchase real estate. And I'm sorry for that long-winded rant, but I really do care about people, the people at the bottom, not so much the investors, but the people at the bottom that are struggling. This channel's for you. Now, the name of this article, and this is by fastcompany.com. I will have this linked in my description, but this is absolutely ridiculous. Blackstone just added another 38,000 homes as it buys fellow institutional landlord Trion. These are the impacted housing markets. And I'm going to tell you guys right now, the good news is that most institutional buyers have become net sellers, which means they're selling now more than they're buying. And also they've just inherited, Blackstone just inherited that company. So what do we know? We know that these institutional investors are suffering. A lot of them don't have cap rates of 5%. So if they don't have cap rates of 5% and they have all this liability, why wouldn't they just sell the houses and buy 10-year treasuries that are yielding near 5%? That's not 5%, but yielding like 4% or even a 2-year. You guys see my point? It doesn't make sense to invest into real estate overall right now. Now, obviously, there's still a handful of great deals, but most people have no idea whatsoever how to find a great deal. A great realtor will find a great deal in 20 minutes. Literally, I can find a great deal in 20 minutes. Test me. All right, let's start reading some of this. When on a morning call with the director of residential real estate, Yield Street, which owns just over 600 single-family homes, someone direct messaged me saying that institutional homebuyer Trion was holding all-hands meetings to tell employees that they were getting acquired by Blackstone. Now, there's a number of reasons. For starters, Trion Residential, which owned 37,478 homes, see, they're just treating it like a number, you guys. We're treating this like this is where we raise our family. We just want a roof over our head. We just want to be secure. We want to live the American dream. But they're looking at this as profit and a bottom line number. So this was as of the end of Q3 of 2023. Now, this is one of the three big publicly traded institutional home buyers. Once Blackstone's $3.5 billion purchase of Trion is complete, it'll just be American Homes for Rent and them. That's crazy. In the American Homes for Rent, which is, again, a net seller at this point, has 59,092 single family homes. You guys may not think that's a big deal, but it is a big deal because generally there are clusters in specific metro areas. So it's not spread around into every 50 states, into every metro area. It's in certain locations. And usually, again, affordable housing is what they're after. Invitation Homes owned 84,697 single-family homes at the end of Q3 of 2023. And Invitation Homes is the biggest institutional investor. Most single-family rental giants are privately held or consolidated into a broader real estate investment trust, or REIT. Second, the sale once again pushes Blackstone near the top of institutional homeownership heap. Stop it, Blackstone. I mean, geez Louise. Back in 2009, Blackstone pulled back from the single-family space as it fully divested from Invitation Homes, which Blackstone has used in years following 2012 to gobble up homes for dirt cheap prices following the housing crash. But by June 2021, Blackstone Real Estate Income Trust was ready to jump back into the single family space with its $6 billion purchase of Home Partners of America. They want our homes so bad, you guys. They want them so bad, which at this time owned 17,000 US homes. Fast forward to 2021, and once Blackstone acquisition of Trion Residential is complete, Blackstone will once again be a juggernaut in the residential space. So anyone thinking that Blackstone is not purchasing single-family homes, wake up. They want our homes. They want our livelihood. They want our dream, and they want to profit off of our dream. Third, this deal provides us with some clues about the types of consolidations that might be on the horizon in a market that has transitioned from the frenzy period during the pandemic home boom straight into a rate-induced slowdown. In July, Invitation Homes completed an acquisition of a portfolio of around 1,900 homes from institutional investor Starwood. So a lot of these companies, like I said, are going under and they're being gobbled up by bigger companies that are doing the same thing. Now, unlike the bigger institutional investors, Trion was not a net seller. So do you guys think that the fact that they were not a net seller is why they're going under or why they have to sell their business? So when the big guys stopped buying, Trion continued to purchase. Very interesting. And they actually, this is a crazy thing, they were purchasing a lot, and they purchased a lot around the peak, the average peak in the housing market. So bunch of stuff here. Now they've slowed that down, and they have increased. You see, I see the red. They have increased the homes sold or dispositions, but that's still not near the amount of home buying they still have been in. So this is good. I mean, if institutional investors, they just kept buying, hopefully they go out of business. But the problem is we don't get a piece of that. Blackstone just gobbled them up. So we don't get the action, which is really frustrating. The rush of institutional home buying during the pandemic housing boom, a period when low interest rates, easy access to capital, and soaring home prices and rents made single-family rentals irresistible to investors. Toronto-based Trion Residential was among the operators who piled in during the frenzy, adding a net 2,400 homes alone in just Q2 of 2022. The institutional frenzy ended not long after mortgage rates began to spike in 2022. Unlike during the pandemic housing boom, capital markets are now weakening against investors, thank you, Jesus, and fewer homes on the market today offer the potential returns operators need to pull the trigger. But when rates go back down and it becomes profitable again, guess what's going to happen, guys? Or if we have a housing market crash and prices plummet, like I'm convinced they will, guess who's going to be ready to scoop those up? Guess who's going to be ready? We need to do something to stop it. If we don't stop it before it happens, it's possible that we will be in a very similar situation to what we went through from 2020 to 2022. And raise your hand if you want to go through all this crap again. I don't think so. We need to stop investment in residential real estate. This is the American dream that they have turned into a greedy, corrupt, profitable operation at our expense. Now, if you're wondering where Trion owns, well, now Blackstone is about to own all of these properties. Here's the metro areas and how many they own. And these are their top ones. First one starting at Atlanta, they own 70. That's what I'm saying, you guys. See, it's not spread around. These are specific areas. So if we have 7,100 more active units in Atlanta, what do you think that's going to do to the market? The market's going to plummet, whether it's rentals or homes for sale. Obviously, that's not yet, but Atlanta is like in super bad shape because of the investor demand in Atlanta. So that's the number one place that they've invested, which is Atlanta. Number two is Charlotte. I went to both. I went to Atlanta and I went to Charlotte. Charlotte, they own almost 4,000. Now, Dallas is another area of high investor demand. I also went to Dallas. They have 2,900 homes in Dallas. That's too many homes, you guys. They are manipulating the housing market and prices. Number four, Phoenix. Guess what? I also went to Phoenix. Investor demand high out in Phoenix, sitting at 2,864 homes. Next is Tampa, sitting at 2,300 homes. And then my home metro of Houston, they got 2,000 homes here in Houston right now. They can't stop themselves. They need to stop this. This is insane. The next one is Indianapolis at 1,800. Then Nashville at 1,700, then Jacksonville at 1,400, and then Columbia, South Carolina at 1,239, followed by San Antonio at 1,078, and last but not least, Las Vegas. So do you guys see what I mean? It's all condensed into these specific metro areas. That's why banning institutional investors would actually be very, very beneficial for those areas. According to Blackstone, Trion's residential portfolio consists of around 38,000 single-family rental homes. I hope they pass this law. If they pass this law, they got to sell 38,000 homes. If they pass the new law in Congress, they have to sell 38,000 homes that they just purchased. Now read this, guys. I mean, this is where people get confused. On a national level, institutional buyers who own at least 1,000 homes aren't massive players yet. They only own around 1% of U.S. single-family stock. But that is BS. And that's only 1,000 or more. What about the people between 100 and 900? That's still a lot, right? And again, even though they're only saying it's only 1%, who cares, right? That's the point that they're trying to make here. Who cares? It's just 1%. But again, when we break it down into those metros, they own a lot more than 1% in the metros that they have invested in. So don't get sold on this narrative. Now, that said, in a handful of regional pockets, institutional home buyers are pretty significant players. In fact, 6 markets specifically, Atlanta, Charlotte, Dallas, Houston, Phoenix, and Tampa, are home to 36.8%. I'm going to read that again. 38.6% of the nation's institutionally owned single-family homes. So of all of these institutional investors, 38.8% of their portfolio is in just 6 markets. Holy smokes, you guys. Louris told the audience that there is enormous variation in how these portfolios are ran, and that deals with the level of sophistication with using data and analytics. That was fine when the US housing market was a raging bull, and that's becoming more and more acute pressure on portfolios that do not really have sophisticated or mature operational efficiencies. When all is said and done, we need it to stop. And I'm really interested to hear what you think. How do we stop this? I mean, because the reality is mom and pop shops are also devastating the housing market. I mean, can we put a cap on, as a mom and pop, like how many homes we could own? Can we say 10? Isn't 10 homes enough? But there are people that are soaking houses up. They have 100 houses, you guys. 200-300 houses. They're selling ridiculous books. They're selling courses on YouTube. They're not even edited. They're bragging about it. These people are absolute scum, in my opinion. Now, I know it's not against the law, and I know there's some great people out there, and there are investors that own apartments, but I'm specifically talking about single-family residences. Some people say SFH was a single-family home. Something needs to change. I don't know what it is. Probably taxes, maybe outlawing institutional investors, at least for SFRs. Go build your apartments. That's fine. Build apartments. But let us afford the American dream of home ownership, please. Someone needs to help. Comment below. Let me know what you believe. Now, other than that, I hope you guys found value, insights, and perspective. And if you're out there investing in real estate, you already know I wish you luck, and I hope you win.